Welcome back. I'm Peter St. Onge. This is a weekly roundup of my daily videos on the economy and freedom, where I cut through the BS and lay out what the gaslighting clowns pulled out of their hats this week and what is coming next. Donald Trump wants to open 401ks to the same alternative investments used by rich people, trusts, and university endowments, from pre-IPO companies to real estate trusts, which could boost the average middle-class 401k by $150,000, passing $700,000 at retirement. Democrats naturally are blocking it because the current two-tier system keeps the good stuff for their donors and rains fees on the law firms who run the velvet rope. In March, Trump's Department of Labor proposed a rule change, so-called PTE 774, to allow regular people to invest their 401ks the same way as millionaires, accredited investors. The idea being getting rich is not only for people who are already rich. Compounded, this could add 20 to 30% to your 401k at retirement. Democrats pounced. Bernie Sanders and Elizabeth Warren recycled the standard line that normies are too dumb to invest, despite the fact 401ks have been around for 40 years, and those normies have generated an average 5x return, $10 trillion, while the government alternative, Social Security, was going bust. So the background here is current 401k rules were written in the Carter administration in a world where the good stuff was generally in public markets. So you could buy Microsoft for $21 in 1986, watch it go to $8,000 split adjusted, and hand your kids generational wealth even if you did not start out rich. You could buy Amazon at $18, that's now $58,000 split adjusted. The idea was keep normies out of the weird stuff since the good stuff is in the stock market anyway. The problem is that all changed with two big laws, the 1990s Markets Improvement Act that made it easier to raise money as a private company, then the 2002 Sarbanes-Oxley Act that made it much harder to be a public company. Combined, these led to an explosion of private equity and a collapse of new listings on the stock market. To illustrate, IPOs, initial public offerings, when a company first lists on the stock market, dropped by almost 2/3 as a percent of GDP. Worse, when companies do list, they do it much later. You're not buying startups, you're buying a mature company that has already been pre-chewed by the rich for a decade. To illustrate, when Yahoo and Amazon went public in the 90s, they averaged just over $1 billion market cap on day one, ultimately hitting $3 trillion combined. Fast forward 20 years, and Facebook, Airbook, and Alibaba also topped at $3 trillion, but they started on average at $200 billion. So normies got them 200 times later. But different, in the 1990s, retail investors got to ride 99% of gains. It was actually 99.95% for Amazon. Nowadays, institutional investors and millionaires are legally reserved almost all the juice. You get to pick the bones. So what's next? Wealth inequality is exploding in America, with the richest 10% now accounting for half of spending. That's up from a third a generation ago. Part of that is a Federal Reserve that pumped assets for the rich while handing inflation to the poor. The other is these rules that rope off most of that pump for millionaires. Trump's rules keep the same oversight and fiduciary duty the industry already uses for rich people's money, but it throws open the gates for normies to make money the way rich people make money. The CEO of ChatGPT wants to give the federal government 5% of his company so he too can enjoy Wall Street's free money and too big to fail bailouts. This would take the most powerful technology on Earth, artificial intelligence, and wire it directly into the crony capitalist machine that gave us too big to fail banks, $900 toilet seats, $1,000 insulin, and defense contractors who somehow lose a war and still get promoted to the next one. More important, it gives the feds a censorship pipeline that makes the 2020 speech gulag look like duct tape and bubblegum. Last week, the CEO of OpenAI, Sam Altman, scam Altman to Elon, proposed giving the federal government 5% of his company, currently worth $42 billion. To what do we, the taxpayers, owe this generosity? Well, scam naturally claims it's charity, so the hardworking men and women of this country share the upside of AI. But just last year, his CFO argued for government ownership stakes in AI companies to reduce their financing costs, while providing a, quote, backstop for the company's loans. Backstop meaning bailouts. So just like Wall Street, shareholders would keep the winnings, well, 95% of the winnings, while the taxpayer would eat 100% of the losses while providing hundreds of billions worth of cheap financing. For the record, I too will give Washington 5% of my YouTube channel if taxpayers spot me $300 billion. Interestingly, Scam's plan is exactly what California Governor Gavin Newsom has been pushing, that AI companies turn over a hunk of their business, so, quote, every American owns a stake in the future, just like we all own a stake in Wall Street. Even more interesting, President Trump loves the idea, perhaps forgetting that he'll be in office 2 more years, after which we'll have generations of Gavin Newsoms to weaponize government ownership of the technologies that control public discourse and free speech. After all, it's one thing when Biden's handlers are making big tech phone calls to censor critics of vaccine mandates or drag queen story hour. It's another thing when government literally owns those companies. So the background here is AI is deeply unpopular and needs regulatory armor. It's willing to buy it. And it is also deeply in debt with very little revenue. Perfect time to cut a deal. It's very similar to Wall Street, which is equally unpopular and has bought itself spectacular regulatory armor and gone even deeper into debt. Of course, once you buy the armor, it is a very short step to buying favors, a permanent lobbying class, so laws are no longer written for voters, they're written for partners. I recently mentioned a study how voter popularity has almost nothing to do with whether laws become laws. It is all about donors. Government literally co-investing with the donors puts that on turbo. It's bad enough with Wall Street defense contractors or chip makers like Intel, which already gave the federal government 10% in return for a bailout. It's much more dangerous when you're handing free speech to the federal wolf that for 200 years has been the enemy of free speech. And with Democrats, rhinos, and Trump on board, odds on prediction market Kalshire running almost 40%, that the federal government does take control of a major AI. So as the next, the promise of capitalism is companies are free to build and they are free to fail. The promise of democracy is the government is supposed to do what voters want, not dictate what they want. Government owning AI companies breaks both. You get a bailout economy paired with a government that runs itself. Europe already has this, and their economy is crawling while community and public order collapses. That is not worth 5% of a chatbot. A word from our sponsor. If you own gold, and many of you do, you already understand how it protects your wealth from the insanity coming out of Washington. The inflation, the recessions, the wars. But with monetary metals, there's a way to actually earn a yield of up to 4% on your gold paid in more ounces of gold. You retain ownership of real, allocated physical gold with no storage costs while your ounces grow every month outside the banking system. If you're serious about protecting your future and building your legacy, head to monetarymetals.com/Peter to get started. One of the best ways to secure your Bitcoin is with a hardware wallet, a physical device that lets you keep your coins offline without internet connection. One of the most trusted names in hardware wallets is CoinKite, maker of the famous block clock. CoinKite devices are made in Canada and they're run by passionate Bitcoiners who've been at this since 2012, back when Bitcoiners were trading in person at swap meets. You can pick up hardware wallets and plenty of other goodies at coinkite.com/ProfSaintAnge. That's CoinKite.com/ProfSaintAnge. Okay, back to our show. If you are feeling left out of Tax the Billionaires, do not despair. It is coming for you. As Leon Trotsky said of war, you may not care about the wealth tax, but the wealth tax cares about you. Last week, House Progressive Kingpin Ro Khanna published his own personal communist manifesto, quote, "Why I support a billionaire wealth tax." I mean, you know why, he's a commie. But what was interesting is Khanna started arguing to tax billionaires. Halfway through the essay, he decided this should be sent to millionaires, 100 million. By the end, he was down to $50 million. That rate, give it a year or two, and the wealth tax will be $50,000. Now, when the progressive mothership first beamed out the billionaire tax, I warned that the billionaires are the cheese in the mousetrap. the marketing prop to pass the tax, at which point Rose communists get to work knocking a couple zeros off till it hits pretty much everybody with a job. This actually just happened in New York, where Comrade Mamdani came in trash-talking billionaires, but he's already pimping tax hikes on millionaires. And of course, it's nothing new. The original income tax was promised only on the rich, $15 million in today's terms is where it started, to, quote, tax the swollen fortunes of men of large incomes so that, according to the 1908 Democrat platform, quote, wealth may bear its proportionate share of the burdens of government. Of course, the rich were the bait. Today, the income tax hits 2/3 of Americans, starting at $15,000, not $15 million. So much for swollen fortunes. Meanwhile, the tax that started at 1 to 7% on millionaires now hits the middle class at a 42% marginal income tax rate. It's 50 in California, not including the billions of hours Americans spend in an annual month-long humiliation ritual, financial colonoscopy under threat of imprisonment. So it's nice of Dems to spring the trap early, but the larger issue is even if it's limited to billionaires, wealth taxes are catastrophically destructive. Because billionaires do not keep their money in swimming pools filled with gold, nearly 100% of their wealth is invested in companies like Walmart, Chick-fil-A, Tesla. So every dollar taken in a wealth tax isn't scooped out of the gold pool, it is liquidated along with the jobs and innovation. Companies fade, replaced with generous funding for Somali clearing centers, left-wing NGOs to riot for social justice, and starting new and interesting wars. The fade goes fast. At Ro Khanna's 5% annual wealth tax, you essentially cancel the investment returns, as in billionaires should piss away the money on yachts and supermodels instead of parking it in jobs. So what's next, brought to you by the Bitcoin Way. Dems will keep pushing billionaire tax because it's one of their few shticks that polls well. Alas, pronouns and open borders do not excite their base like getting other people to pay for their welfare. Of course, that tax is just the first act. Khanna is already pushing for the proceeds to seed a one-year universal basic income that would pay millions to sit on the couch, naturally including migrants. This is Democrats. Essentially a venture investment for trillions in future vote-buying, bread and circuses forever. The great economist Frederick Bastiat once said government is the great fiction through which everybody endeavors to live at the expense of everybody else. Taxing billionaires, and now millionaires, is the cheese in that trap. Follow for daily videos. Okay, we'll be watching. See you next time. AI is eating the girlfriends and boyfriends as Americans now spend more hours on AI companion apps than they do on dating apps. To be fair, humans had a good run. A fresh study by Sensor Tower found Americans spent roughly twice as many hours on AI companion apps than dating apps last year. That's 700 million hours on AI girlfriends and boyfriends versus just 300 for dating. It's getting worse fast. A year ago, the two were almost even. Since then, AI companions have gobbled up 200 million hours, while dating apps fell by 30. 28% of American adults now say they've had a, quote, romantic relationship with an AI. For teens, it is 72%, as in AI is now the default dating experience. A single bot, Character.ai, has 20 million monthly users, of whom half are not old enough to legally rent a car. This is gutting traditional dating. Match Group just finished a round of mass layoffs. Bumble stock is down 90%. Tinder use is down half since 2022. Interestingly, use appears to be roughly equal by gender, with some studies finding more men, some more women, some about even, suggesting the issue is not sex, where men and women have dramatically different use patterns. It is companionship. People are lonely. This aligns with other studies finding Gen Z is the loneliest generation ever, with time spent with friends down more than half, and 2/3 of young men reporting no close friends. Cigna found while just 45% of boomers report feeling lonely, 80% of Gen Z do, and keep in mind they're in school. Not surprisingly, being single was the single biggest driver of loneliness and depression, which according to the CDC now affects a majority of young women, with a 60% jump in clinical depression in the past 10 years. In short, men are lonely, women are lonely and depressed, and they're both using AI to fill the gap. Now, all this matters because marriage rates were already plunging before AI, recently hitting a 120-year low. Fertility rates are even worse, at just 1.6 per American-born woman, a fifth below replacement. Now, I mentioned in previous videos how this is almost entirely a liberal phenomenon. Conservatives are getting married and having kids, to the point nearly 90% of actual fathers are conservatives. Still, given kids are locked in 12 years of government day prison followed by 4 years of progressive finishing school, even the conservative kids are force-fed the liberal gospel on the evils of marriage, family, and traditional courtship. So what's next, brought to you by the Bitcoin Way. Part of AI eating all the girlfriends and boyfriends is landmines planted by liberals in male-female interaction. But the other part is dating itself, which thanks to apps turned into a winner-take-all, where a few guys rack it up while the normies make do with video games, porn, and AI waifus. You've probably seen TikToks of young women saying 6 feet and 6 figures is the table ante, which, fun fact, is 2% of dating men, leaving 98% of men to the AIs and leaving 98% of women who have high standard themselves into cat lady Spencerhood. As for how to fix it, spending more time with real humans, whether that's church, hobbies, running clubs, volunteering. For guys, hit the gym, learn some game. For women, lower those standards until you find an actual match. 5, 10, and 80K is not hell on earth. Meanwhile, boosting jobs and wages while cutting home prices would go a long ways to turning men back into an asset for women. And finally, saving the next generation, Gen Alpha, out of progressive day prisons so they can respect traditional courtship and marriage. Until then, the future belongs to the AI waifus. Follow for daily videos. Okay, we'll be watching. See you next time. A word from our sponsor. Stocks and even gold are all over the place. If you're ready to diversify, Abundant Minds makes Bitcoin mining simple, transparent, and human. You can deduct every penny thanks to Trump's big beautiful bill. It's a 401k for Bitcoin mining. Founded by husband-wife team Bo and Christine Marie Turner after losing $500,000 to broken promises in the mining industry, Abundant Minds was built to protect investors. You own the machines, and they make it turnkey with hosting in their facilities in Oregon. Pricing is clear with one flat monthly fee and no surprises, and they guarantee uptime so you keep earning day in, day out. If you want easy diversification without pressure, learn more at abundantminds.com/Peter. to get some of your first Bitcoin mine for free as a gift to my audience. The biggest risk in Bitcoin isn't volatility, it is custody. Because Bitcoin removes the safety net, there is no bank to call, no reset button if something goes wrong. The reality is, most people are not properly set up. They hold Bitcoin but rely on exchanges, incomplete wallet setups, and have no real plan for privacy or inheritance. This is exactly what the Bitcoin Way solves. They help you move from exposure to actual ownership, self-custody done right, privacy, inheritance, even running your own node, all set up with you step by step. They never touch your Bitcoin, they're your support team. Go to thebitcoinway.com/Peter to book a free call and go from where you are today to a much stronger setup. Now back to our show. It's regime change at the Fed as Kevin Warsh carts off the Jerome Powell legacy to the dumpster. Is it enough to save the Fed, or is it time to dumpster the entire creature from Jekyll Island? Last week, freshly minted Fed Chair Kevin Warsh held his first big FOMC meeting, launching multiple salvos that changes coming to the Federal Reserve. On interest rates, it was pretty much what everybody expected, holding rates steady at basically neutral. Fed members' rate expectations crawled up, which is not surprising given inflation took off on oil prices. But the Fed's not panicking into hikes, which is good. But the big news was Warsh announcing 5 changes to how the Fed operates, as my based colleague E.J. Antoni puts it. Warsh wants to dismantle the Fed bureaucracy to reorient it to the job it is supposed to do, fight inflation. So first, Warsh slashed the so-called policy statement the Fed puts out to manipulate markets every meeting, replaced with a repeated promise of, quote, price stability. Wants to improve the data the Fed uses, which is long overdue since the Fed has step-by-step painted itself into inflation data nobody believes. A YouGov poll last year found over half of Americans with an opinion do not trust government inflation numbers. Warsh wants to slash the mission creep that took the Fed from inflation fighter to economic manipulator to, under Jerome Powell, climate change and DEI, fiddling with systemic racism while inflation burned at double digits. Finally, Warsh announced a review of the $7 trillion Fed balance sheet, which is the accumulated assets, mostly federal debt, the Fed has bought with freshly printed dollars since the 2008 crisis, especially since COVID. That's where it basically types numbers into Excel sheets in the basement, announces they are dollars, and buys everything in sight, which prints new money. Now, this printing was the main reason for Bidenflation, and Warsh has argued for years to pawn it, cancel the dollars, which lowers inflation, and use that to let rates come down to boost Main Street growth. In other words, take from Wall Street, give to Main Street. That plan got scrambled with energy prices, but Warsh apparently still believes, with the caveat that his hands could be tied since Wall Street long ago digested that $7 trillion and could have a seizure if it's cut too fast. That already happened in the so-called taper tantrums when Bernanke tried to drain the punch bowl. So this is all respectable stuff, but the larger issue is why fix the Fed when you can get rid of it? Not as a legal entity, Congress would have to do that, but as an economic manipulator. After all, the Fed is the cause of both inflation and recession, manipulating rates down until prices take off, then fighting the prices with hikes till you get a recession. Presto, boom, bust. The few legitimate things the Fed does, like payment and banking oversight, are already done by Treasury or OCC. The only thing a Fed adds is a counterfeiting cartel and bank bailouts. Concretely, this means letting markets set rates, no forward guidance, no policy statements, no anything. Swearing off the money printing, no QE, no $7 trillion balance sheets, and letting banks know if they overlend, there is no bailout coming. They'll go bust and get acquired at auction like any other business. That would be true regime change. So as the next brought to you by The Bitcoin Way, sadly, Warsh is not a revolutionary. His regime change is closer to rearranging the silverware. So expect some improvements on the edges, maybe less climate talk, maybe even some better inflation data, and hopefully a Fed chair restrained enough that his boom busts are not as bad as the other 16 Fed chairs. Thanks for tuning in. Remember to subscribe so you don't miss an episode, and go to petersanons.com for daily videos and in-depth articles with charts and all the gory details. Okay, we'll be watching. See you next time.